real GDP growth has been negative for 2 consecutive quarters. Now, that's what I've always viewed as a technical recession. Usually there's not much pushback to that, but there has been this time around. But one of the confirmations that we're in a recession are the leading indicators. So there's a leading indicator index that the government puts out every month. And whenever it has shown 3 consecutive months of decline, as it has, we have been in a recession. Now, the Fed is basing policy on 2 lagging indicators. They're looking at headline inflation, or it's actually core inflation, but they're looking at inflation indices, broad-based inflation indices like the personal consumption deflator, or the CPI or the PPI. And those headline numbers look awful right now, and have been pretty sticky in the last few months. And so I think the CPI is up to 9.1% on a year-over-year basis, and I think the PPI is up 11.3%. So those are very high numbers, and as you know, we don't think they're going to be sustained. And in fact, we think that this monetary policy and fiscal policy restraint in the midst of a recession is going to cause much faster decline in pricing.
The official unemployment rate is not the actual unemployment rate. What the government reports at 3.5% is U3. The actual unemployment rate is U6. There is a big difference between the official unemployment rate and that U6 number, because the U6 number includes all the underemployed people who are working a part-time job. They really want a full-time job, but they can't find one. They're looking for one, so they settled for some part-time job just to get by. They are not considered unemployed in the official rate, but they are in the U6. Also, there are a lot of people who are discouraged. They want a job. They were looking for a while. They couldn't find one, and so they stopped looking. They still want a job. They're just too discouraged to look for jobs. Labor force participation rate is actually the lowest of the year. It was at 63.4% in February of 2020 before the pandemic. Now, the highest it has gotten since the pandemic was in March of this year, despite 528,000 jobs being created. And despite the unemployment rate falling, people actually left the workforce. All these jobs were created while the number of people working actually went down. Think about that. We have 528,000 new jobs, but we have fewer people actually working. One of the most important things you could do for your family is make sure they're financially taken care of in the event that you're not there to do it yourself. Unfortunately, most people looking for life insurance end up being sold a whole life policy when what they really need is term, because term life allows you to maximize the size of your death benefit while minimizing your premiums, freeing up more money to allow you to make much better performing investments than what otherwise might be available inside a whole life policy.
The employment number came out today at non-farm payroll, an increase of 528,000. Expectation was 250,000. And so big surprise on the high side of expectations. Wages were higher than expected. Hours were revised up in previous quarters, hours work or the average work week. So we'll see how much this is subject to revision. We won't be able to tell for a while. But employment is a lagging indicator. These headline inflation measures are lagging indicators.
Oil prices have been very weak. In fact, as of Friday, the price of oil is about $88.50 a barrel. That is lower than the oil price was just before Putin invaded the Ukraine. Now, if all the inflation is because of Putin's price hikes, but oil is actually cheaper now than it was when Putin invaded the Ukraine, how can the inflation possibly be Putin's fault? Now, unless you think that all of a sudden we're going to have a complete collapse in consumer prices, that all the inflation since the Ukraine invasion is about to be completely unraveled and prices are about to be slashed, then you can't possibly think that we have inflation because of Putin's price hikes when Putin has actually helped deliver a price cut. Now, I get it that gasoline prices at the pump are still a lot higher than they were when Putin invaded, but you can't blame that on Putin because he doesn't have any control over those prices.
If you look at initial unemployment insurance claims, they bottomed at, I believe, around 170,000, if I'm not mistaken, and we're up about 55% since then. 55%. That is the fastest increase in that measure of unemployment that we have seen in a recovery. In a recession, in a recessionary period since 1969, which is as far back as we went in terms of analyzing this. So that is saying something's changing pretty radically here. I mentioned household employment. The Challenger survey of job cuts, those are up 59% on a year-over-year basis. And I think they measure reductions in force.
Biden boasted about the fact that there are now more people working in America than ever before, employed. That's a lie. Maybe we have more jobs than ever before, but we don't have more workers. It's just that each worker has more jobs than ever before because the economy is weak, not strong. The high point of people having jobs, employed people, is February of 2020. But even since the economy reopened, July is not a record. The record since the pandemic is March of 22. In fact, even in May of 22, more people were working than are working in July. So the president was wrong. People are working more jobs, but more people are not working. What we have are more people who have decided not to work.
So we saw gas-powered sales year to date down 18%, and electric vehicle sales up 71%. So talk about disruptive innovation. It is happening in the auto sector, and I think it's causing quite a bit of consternation at the auto manufacturers. We've just done an analysis on Ford and GM versus Tesla's capital spending, the consensus estimates over the next few years, and Tesla's capital spending is going to surpass their capital spending within a year.